All right, what's going on, everybody? Welcome to episode 3 of my trading course that I'm putting out on YouTube. This video is going to be solely on entries and exits, and I'll touch on risk management as well. In the last video, I just kind of went over a brief overview of the strategy so you kind of get an idea of, the setup. Obviously, it's a bull flag setup on the momentum leaders, and then we trade the breakout of that. And today we're going to kind of go over what the breakout looks like on the intraday time frame and how to actually use that to enter a position and be confident that you're doing it correctly. It should be a fairly quick video. It's pretty simple. There's nothing complicated to it. So let's just get right into it. Okay, so first things first, we're gonna get started here with ticker symbol DEL. This is a setup that just broke out this past Friday, I think it was. And well, to first, I guess, get into entries and exits, we have to first make sure that we've identified our setup, right? And just to briefly touch on it, you see we've got a large move up over, a few months, and then it pulls back here into our moving averages. You can see it bounces off of our moving averages, building for the most part higher lows and lower highs, and you can see it flags here, and you can see here on the 1 minute or out there on the 1 hour. You can see this clear range identified here, right? And once we've identified this and the stock has gotten tight enough, basically just waiting for it to break out. And the way we do this is extremely simple. So you can see here, if I zoom out on the 1 minute, this is the day of the breakout right here. On the day of the breakout, specifically this trade, because in the pre-market, you could automatically see it was trading at like 268 when the range was down here in the 250, 240 range. So you knew it was breaking out pre-market. And you basically, when you see a stock do this out of a range, your only goal is, all right, we're looking for high volume at the open, and then I'm buying it basically right off the 1 minute opening range high. So basically what that looks like is I'm gonna, at 9:30, wait for this first candle to form, this first 1 minute candle to form, and I'm gonna look at the volume here. And you can see pretty clearly compared to, the previous day, right? Because I think, this is the previous 3 days right here of trading. You can see pretty clearly how high this volume on this 1 minute was compared to all the rest. So you knew volume was coming in. That's our first confirmation, and really our only confirmation when it comes to entering a trade. The next confirmation we're looking for is just the opening range break, and that's just our entry right there. So once this first 1 minute candle's high breaks, right here, if I could grab it, all right. Why does it not give me my... Right there. Once this first 1 minute candle high breaks on this 1 minute candle, we're entering the stock, and we're using our risk calculator here. We're buying 27 shares, 30 shares, whatever, and we're in the stock. That's all there is to it. It's that simple. I mean, there's nothing else to entering the stock. You basically just wait for it to escape the range. Make sure that your stop loss is not going to be wider than the ADR percentage of the stock, and that's it. Wait for that 1 minute opening range high or 5 minute opening range high candle to break, and you're in. So that being said, I guess I can touch on that a little bit. Let's say we had all this volume come in on this 1 minute candle, and then the next 1 minute candle gets stuck here, and then maybe flips red and gets stuck here, and then the next one does it, and then for like 4 minutes it does that, and then on the 5th minute a new 5 minute candle forms. All you have to do is come into the 5 minute and use the 5 minute opening range high, right? And then you can just trade off that. You can do it off the 15 minute, 30 minute, hourly, whatever. Obviously, the shorter time frame candle you use, the riskier it is, but the better your entry price is going to be. So you're going to get stopped out more times than you would if you were using the hourly candle on the 1 minute candle, right? If you use the 1 minute candle for your entries, just expect to get stopped out more and lose on more trades, but your winners are going to have a much higher risk reward ratio, so it evens out. I typically just enter off the 1 minute or the 5 minute. That's primarily what I like to do. I like to take my entries in the first like 30 minutes of the trading day. I don't like to enter like at 3 p.m. because there's always an influx of volume that comes in at 3 p.m. I don't like trading that way. I like that opening 30 minutes of the stock market opening of 30 minutes of the day to trade, to take my entries. But yeah, that's pretty much it for entering, right? And then obviously risk management wise, we put our stop loss always at the low of the day. So the low of that first 1 minute candle. Which, why does this look so weird now? Oh, this is why. Right, so that low of that first 1 minute candle is where our stop loss will go. Oh, that's why. And somehow turn the pre-market on. Whatever. Yeah. What else can we talk about here? That's pretty much it for entries. Risk management, I've talked about this in the past. You only risk up to 1% of your account per trade. If you want to push that risk, that's up to you. But you know, basically, the higher your risk is, the bigger your drawdown is going to be over time. So if I were to risk up to 2% per trade, my maximum drawdown might be 50% of my account, meaning I might lose 25 trades in a row, and my account balance is going to be down like 50% from its peak. So 1% of my account per trade, you use the risk calculator down here, which you guys all this should come in when you use the link in the description for TC2000, right? When you use my shared layout, all the risk calculator, the volume, the moving averages should all load automatically, and then you just edit it like this and put whatever your 1% or 0.5% risk is right here of your total account balance. And here you can see it says stop loss low a day. It automatically does that for you. That's pretty much it for risk management. It's really that simple. I guess I'll talk about exits here. So exits, very simple. Again, this whole trading strategy is just simple. I keep saying it, but it really is. The way we exit trades is, I'll show you on ARM, because I know some people just entered this one. So ARM, I was in the stock here. I know a lot of people entered here. On the 3rd to 5th day, so after 3 to 5 days of holding the stock, any stock, I will look to sell 10% to 25% of my shares. On a move like this, it's very simple. Honestly, on the second day here, right, if I bought it on this day, on the second day up here, I'm taking 10 to 25% of my shares off the table. And that is solely because I've hit a 1 to 5 risk reward ratio. And for those of you that don't know what that means, basically if you have a $1 stop loss and from your entry price the stock moves $5 up, then you're at a 1 to 5 risk reward ratio. You can sell 10% up or up to 25% of your shares. And then I will move my stop loss to break even, so whatever my entry price is. Again, very simple. Just, and an easy way to do this, because when the breakouts work, typically on that 3rd to 5th day is when they make like a good leg up, like a good 30% move, and then they'll start pulling back, waiting for the 10-day SMA to come catch back up, and that's where you kind of start selling, taking a little trim, moving stops to break even, and then that you'll try to let it run, right? Until ultimately, you wait for a day like this, right, after a big leg up. So let's say you took this trade down here, you sold your 10% in here, and then you held until this day here. And on the day that the stock, it looks like it's about to close below the 10-day simple moving average, so like at 3:50 p.m. you should be checking all your positions. And if the stock's trading like down here at 3:50 p.m. or 3:55, you can sell your entire position. And this is like basically our exit signal, is the stock's about to close below the 10-day simple moving average and we're going to get out. There's some nuance to that. One example I talked about in the past, UAMY. I held this one through a 10-day simple moving average close, and it went on to like do more than double from there. This is where I held it here, right? Because we had this leg up, and I sold a little bit in here, and it pulled back, and right here it closed below the 10-day simple moving average, which technically I should have sold according to my rules. The only time I won't do it is if the stock is trading extremely tight and within a new range, essentially. Kind of how this one was, right? It started building some higher lows here and then put in a lower low, but it was still so tight this day that I didn't sell, and I was really looking at it at the next day's open. I wanted to see if it was gonna gap up or gap down, and then ultimately I was gonna either sell it or hold it. And this wasn't too big of a move originally. It was a 15% gain. So this was kind of one of those trades that's like a base hit, just kind of makes up for your losers. So if it did gap down and I had to sell it, it was kind of like whatever. And then ultimately it obviously did it, and it popped. And then it ended up really running. So this one worked out for me. I don't recommend doing that if you're new to this strategy. I just recommend selling it right when it closes below that 10-day simple moving average, unless you just can clearly tell like the stock is still showing a lot of strength. But well, honestly, other than that, I mean, that's really entries and exits. So just to summarize it real quick, you're entering on the 1 minute or 5 minute opening range highs. What that looks like, go back to Dell here. What that looks like here is, right, we obviously have our, so actually here was our 1 minute on this day. So we obviously have our 1 minute candle. No, that's not right. This is the 1 minute. Sorry. We have our opening candle here. And we have a high volume compared to the previous days, right? You have these skyscrapers of volume here. And so that checks box number one. Once it breaks this, once the second 1 minute candle breaks immediately, once it breaks this first 1 minute candle's high, and we've already confirmed that there's a lot of volume coming in and the stock's gapping up on the daily time frame, we can buy this stock and throw our stop loss down here, right? Throw our stop loss down here at the day's low, right? Stop loss is $6-ish, and if you were to take this trade, you'd be up around $17, so about a 1 to 3 in the first day. That's pretty much it for that. Never risk more than 1%. Try to risk around 0.5% per trade, and look to add on later down the line for a stock. And then that'll ultimately get your risk higher and higher. One thing when it comes to entries and exits is, will I add on to positions if one maybe like took this trade or something and it just kept pushing up, and then it, you know, pulls here, and then would I add on if the setup kind of like if I take one setup and then the stock later down the line sets up and I haven't sold yet? 100%. I treat them as two separate trades. So I will risk 1% on one trade, and then if a new setup comes up and I never got stopped out of the first trade, I'm willing to risk another 1% or another 0.5%, whatever. You know, I'm not putting a cap on a stock's total risk for me. I'm putting a cap on each trade. But that's pretty much it. And then exits, wait for the stock to close below the 10-day SMA, and that's your exit signal. And that kind of summarizes entries and exits and a little bit about risk management. If you have any questions, remember I have my Discord where I'm kind of building a community around this trading strategy, and I'm trying to bounce ideas off of each other and teach you guys. If anyone has any extra questions or needs extra help, I'll do a lot of weekly Q&As in there, and I'm happy to help people one-on-one. I send out my weekly watch list in there and all my entries and exits for stocks just like this one. But yeah, that wraps this video up. Feel free to shoot any questions down in the comments. Remember, all the links for everything are in the description. And I will see you guys in episode 4, which is going to be about our scanning process and our scanners, and how they work, why they work, and that sort of thing. Peace.